And we're live. We've got our boy Powell speaking. He wants to disrupt the markets as much as he can. I personally don't care what he says. I actually never care what the news numbers are because it's all just manipulation. So here's the dollar. We're at 50% of the range, which means it can go up, can go down. I don't know. You don't know. Warren Buffett doesn't know. If anybody says they know where the dollar is going, they're lying. Like Mufasa. Stupid. So we got 14 minutes. If I was controlling the market and I wanted to lower the dollar, I'd have price come up in here, closing this gap. We'd be an optimal trade entry. We take out the sell side here. We have some gaps. On the 4 hour, we've got some fair value gaps in here. We have a nice bullish order block where if price comes down here over time, that could be a nice buy. Whoops. You're not supposed to see that. That's advanced mentorship right there. Look at this. Incredible. 570 pips on the Sunday Open. You don't see that very often. What does that mean? It means the UK's most likely in trouble. I would almost favor the dollar going lower so we can come up and clean up some of this, but it's a long ways away. 200 pips, 500, 600 pips. That's a lot. Normally, if you get 250, maybe 300 pips in a week, that's a good week. And we're getting 500, 600 in a day. Water. Stay hydrated, my friends. So here's what retail does. Retail will do stuff like this. Let me take this line off. And they'll go, so I see this trend line here, and because there's a line that goes down, see how price is respecting it? So we're going to keep going lower. This is usually when they spike it higher, take all these retail traders out, and then they get mad, like, oh, I should have known that this last one was good. But it could keep going lower. It's not an optimal time to be trading. I'm actually not going to be trading because it's just gambling. But what I will do is first I'll pet my cat that just hopped in my lap. Yeah, say hi to Emma. What's up, baby? But I need you to stay down here for a little bit. If you could, I'd appreciate you. I had this as my thumbnail for my other two videos, but I'll just keep showing Any personal information on here? No, sir. So here's my FTMO accounts. Well, account, I should say. This just shows I do have, you know, a live account with them. I do try to make money. You don't always make money. Had a nice little 3% month there, 3.5. So that's cool. So the way I look at price before big news is I always look at where the liquidity is. And we've got liquidity on both sides. So let's do this. Right. Take this off. So retail likes to call this, you know, a wedge. Oh, price is coming down and it's gonna break. So what they look for is they look for, you know, let's say price to come down here, come back up, retest this trend line and go lower, or vice versa. What I usually look for is the price to come down here, take out some kind of sell side or buy side, and then violently go up. Also could be turtle soup. What's a turtle soup? Has nothing to do with turtles. Let's see what gold's doing. Gold's not doing so hot. I know if you have a whole bunch of gold, you're hurting. Physical gold. See, I think what a lot of people in the regular world who don't trade don't realize is I could buy gold or sell gold on, or I guess anyone who trades on trading platforms, but you don't actually like own the gold, right? So I can't buy 5 ounces of gold on here and then bring it to a shop and say, hey, I digitally have 5 ounces of gold. So that's part of the reason why gold price can fluctuate so much. It's not just people in the real world buying and selling. You got people buying and selling on the digital asset as well. So we have sell side taken here, and it's good enough. Break a swing high, come back into the imbalance. Baby, listen, I love you very much, but I need to be able to see my screen, so I can't have you blocking me. Filling the imbalance, we come up. So far it's not respecting this bearish order block. We got buy side liquidity right here. So we could see gold push up. But if gold pushes up, most likely means dollar's going to go lower. Gold and dollar don't have to be inverse. Gold can really do whatever it wants. That's why it's kind of sketchy to trade. For the most part, if you believe the dollar's going down, you can be pretty confident that pound and fiber are going to go up. You won't typically see the dollar push up super high and fiber and pound go up as well. You might have one of them be less volatile in the opposite way. So like if the beast here is bearish, which means euro is weaker compared to the pound. If dollar is going up, the pound might drop. The pound might drop lower. The pound might drop less compared to the euro because the euro is weaker. So if this is falling and dollar's screaming up, I would want to be selling euro instead of the pound. You got 4 minutes. I really like this area here. It's pretty clean. Everything else is pretty much filled in. See, the algorithm will look for areas like this, and it says, hey, I need to fill this in at some point. See, the trick is you don't know when it is. You want to get the highest probability time that you think, okay, it's going to go up there. And in my opinion, we are, let's say, 170 to 200 pips from there. And we're 260, 200, such a big range. We'll say 230 to 300 pips from down here. So since we're closer up here, if the dollar is going to be bearish, but when Powell speaks, you could see the dollar shoot up here real quick. Everyone thinks, oh, it's the dollar screaming, they're going higher, buy the dollar. And then it crashes. Back in the day, I'd love to be trading right when big news like this hits. Chase that rush. Come on, I want to make money. I want to save equity is what I want to do. Retail will see this. As resistance. We'll see down here as resistance. The dangerous part about pricing a consolidation is if you think it's going to go up or going to go down, you could justify it both ways. If you can justify your trade both ways, it's not a good trade to take. You want to have your trade so heavily favored one way that's going to build confidence in your trading. What's tough about the pound is, I mean, even this move here, that's 50 pips. $120 pips. And we're still in this consolidation. So from this high to this low, we're a little bit we're a little bit above the halfway point of the range. But look how nice that is. All right. Comes up off the range low here, hits optimal trade entry. It's respecting it here. If I was looking to sell the pound and it first came up here and it dropped and then it came up and hit the 61.8% retracement again, dropped, I'm not going to feel too confident. Now what it could be doing is building up this liquidity. Price can jump up, take out that liquidity, still stay in the optimal trade entry, shoot lower. But if I'm trading off of a bearish order block or OTE entry, I really only want to see it hit once and then have an immediate reaction lower. That shows a pre-sign that the trade is going to be more likely to be good. I'm going to be more likely to hit that green profit button. And there we go. Powell is quote unquote speaking. And again, I don't care what he says. He can come out and say, the U.S. is going into the greatest depression of all. Now that would have a big impact on the market, don't get me wrong. But the fact, ow, don't attack my leg. He would never come out and say something as extreme as that. But their jawboning really means nothing. People try to decipher what he's saying, how it could be taken, what's the market going to think. All the market knows is that Powell's speaking. And so far, pretty quiet. At 10 a.m. though, we do have the CB consumer confidence. So maybe that's what the market's waiting for. We also got news at 8:30. More mild impact news. FOMC Bullard speaks at 9:55, which I don't think anyone's going to care about that. New home sales at 10. Richmond Manufacturing Index at 10. So we got a good amount of news. Doesn't necessarily have to be moving right now. Now here's a little personal opinion. You guys think that the President of the United States is the most powerful man in the world? It's probably Jerome Powell. Since he controls the currency, he controls the world in a sense. My cat has the zoomies and she's attacking. She gets this weird look on her face and she turns sideways. And she don't stop. Yeah, you can lay up on here. Don't be biting my wires. Because if you bite my wires, I'm going to lock you in the closet again. No, I'm just kidding. I don't do that. Hey. I just said don't touch my wires. Here, want to say hi to everybody again? What's up? Can you be good? Huh? Can you be good? See, she looks like she don't like me, but she was cuddling me so hard when we were sleeping. You didn't want to get away from me. And now you don't want to be in my arms. Good. Please stay away. For a little bit. We can play later. Promise. So let's just say for giggles, if we were looking to trade. We take out this high, go below, swing low, go below another swing low, come back up. Come back up into a bearish order block. We drop lower. Price fills in here. Seems like we're going lower. Relative equal lows here. Okay, so if the dollar's dropping, what should the pound be doing? Okay. Going up a bit. Euro. So let's look at this. Bullish order block. Let's see. Yeah, a little swing high here. We got a swing high here. Go above the swing high. Come back down into another bullish order block. Got relative equal highs here, but again, price can do basically whatever it wants right now. Hey, stop it. I'd be more inclined to say that this is bearish if we came up and at least hit 50% of this gap. So, oh, I'm good. I got an eye. Look at that, we got 50%. It could even, and I guess no. It could even barely go into the gap here and then drop down, but the fact that we didn't, I don't like that. Let's do this. Let's make it clean again. So 4 hour higher time frame. We do have all these imbalances here that price could want to fill in. Got these equal lows. And what is under equal lows? Yeah, 5 seconds. What's under here? Stops. We got stops under there. People put their stop loss, right? People buying. They look for an area that looks safe. That looks safe. Look, price bounced 3 times here. Shouldn't go down there again. If it goes down there again, I don't want to be in the market. When in reality, that's usually when price will drop down, fill in an imbalance, and then in a bull trend, continue going higher. Let's see, what's gold doing? No real movement right now. Which is actually kind of expected after a huge move in the previous day. Usually after the market has a big range day, the next day or two or however many days consolidates, the market wants to build in orders. So when the market's screaming lower, you have people that jump in, you know, who chase price and they sell. Now, the people who chase in such a historic time period, you know, they're rewarded. They'll get 40, 50, 60, 70 pips. But normally, if the daily range is 100 pips and after 70, 75 pips, they chase it, they might only get 10, 15, 20 pips and then it consolidates. And then they sit there and go, oh, you know, maybe I missed the big move. And then they put their stops somewhere reasonable. And the market will let them build up on both sides. And then it'll attack whatever it feels that it needs to attack to keep the market balanced. Because unfortunately in this game, not everybody can make money. If everybody made money, the market wouldn't work. Here's a little lesson for you. Your 401ks, everybody's 401ks, everyone's retirement plans, they are broken up into different assets. Some of them might be in Forex, but whatever asset you're talking about, the banks have to offer liquidity to each other. So in your retirement plan, if you look, you actually sign that you give the bank permission to use your funds as liquidity. But see, the banks, as greedy as they are, they understand the game. So what they'll say is, hey, bank A, bank B. And it's not exactly like this, but here's the premise. Hey, we've been buying the market, and we know that you've been selling the market. So we're going to make money, and where you sold over here, we're going to get off some of our buys that we had down here. So we're going to make a profit. You're going to either take a small loss or break even, and then at this point, you can get in the market, you can get up, and then when we sell you can sell. We'll bring the price down, and it's something like that. It's not exact, but that's why banks will say, "Oh, we'll give you a guaranteed 10 to 12%," and you go, "Oh yeah, that's great." Meanwhile, they can be making 40, 50, 60% on the year on your money. They give you a 10% cut, and they're making boatloads. That's why with FTMO, for me, I'm not directly in the market. It's still a broker, so I'm not getting exact market executions. See, the goal is eventually to have millions and millions where you open up an account with a bank instead of a broker, where you get actual market executions. And in that case, what happens, you want to sell the market, right? Sell it up here. It doesn't go through right away, because they actually need to pair it up with an order. So if you sell it here, but there's no opposing buyers, the price might go up. So you might get a better sell than your original entry. Like right now, if I were to trade, which I'm not gonna, and this is a demo account anyway, but if I hit buy right now, I would get this exact price. But if you're in the market, there's no guarantee you get this price because it needs an actual order to be paired up with. That's crazy, huh? Pretty dead market, pretty dead. I guess Powell is not jawboning as much as people would hope. He didn't come out and say anything too crazy. Look at that. What a beautiful fill-in. .9670 low, 0.9666. That is an unlucky number, but beautiful. Beautiful. Higher time frame will have you more successful than if you just go to a 1 hour. Okay, here's what I see. Then you go to a 15-minute. Okay. And then a 5-minute. Right, you see how much difference there is in price action? Right, so daily, we're obviously really bearish. 1 hour. Yeah, okay, we're still bearish. It's not a really good example right now because everything is so bearish. But like here, someone could see this and go, oh, this is bullish. 1 minute. Like, oh man, this is bullish. It could be. But based on the higher time frame, do you really want to be buying right now? I mean, I don't. I would rather wait for price to come up into a premium and then sell into that premium to go lower. That is, as long as the dollar and my analysis is still going to be going up. Ooh, baby. Oh, what's up, chat? My bad, I didn't even see. What you think about GU? This is what I look at. I look at these. I'm actually not really interested in any other pair. The more pairs you look at, the more cloudy your judgment gets. I stick with these three. Uno, dos, tres. Look at the beast here to see which one I want to trade, and then the dollar. Another thing I look for, if the dollar takes out, some key levels here, if I'm bearish on the dollar and it goes below here, I don't want to see it immediately come back. If it immediately comes back and closes and then starts moving higher, that could be a turtle soup to go for other liquidity. Now, typically, if I think price is going down here or down here, I would like to be up in here. And once it breaks this low, I want to see it expand, because I don't want to see people who chase price, I don't want to see them get in. Because if the algorithm doesn't want them to get in, it'll just expand lower and it won't give them the break, retest, keep going. It'll keep going whichever way. So that's something that I look for when I'm in a trade. Like right here, for instance. If I was looking for the dollar to go lower, right when we went below this low and we came up, I wouldn't immediately say, oh, I need to get out. I would give it a chance, maybe not this quick, but I would give it a chance potentially to come back up into some kind of bearish order block, fair value gap, breaker. Ideally, though, you want to see it go lower and then expand. You don't like to see this kind of choppy, even before here. Before it came up here, right? It's like here you go, you know what? Once this candle hits here and starts dropping lower here, I want to see this candle start to move lower. And when it starts doing this, especially when it gets back up in here, I would not consider that a high probability trade. Now, obviously, cherry picking a little bit because price did go up, but you want to see price do something. Okay, I sold in here. I want to see price. And look at that. That's the movement I want to see. And then I want to see it continue. This move here, that's 100 pips on the dollar, which is hundreds of pips on foreign currency. And right now, it's not really doing much. I'm going to give this until 8 o'clock, see if we get some movement. If not, I might come back for, I might come back for the 10 a.m. news. I think that'll be the next major news driver. I mean, I could be wrong, and at 8:30 the market moves, but I think the market is waiting for that 10 a.m. See, I'd be a lot more confident in this going lower if we came up in here, any point in here. Because now my skepticism is having me think, okay, if it goes down and comes up and retraces, what if it's coming up to retrace to come back up here and then take out these highs? See, another thing with this kind of price action, price is going up, up. We hit a major high, and on most brokers, right? Price, I can't even go back anymore. I can't even go back anymore. Now there'll be, on my other broker, they have up until 1992, I believe. But the dollar is in such a high premium that it's reasonable for the dollar to fall lower and rebalance more. But to pick a top in such a bullish market, it's not the best strategy to use. Because the second they make you think, oh, we made a long-term high, goes up, takes you out, and you second guess yourself. Man, why did I try to sell such a bullish pair? Stupid. And then you sit in your room and you take your blankets and you roll up into a cocoon and you just think of all the stupid trades you've done and cry yourself to sleep. No, I mean, I haven't done that. That's just something that could happen. I've actually never cried from a losing trade. First time I got my FTMO account, so after the challenge, got the verification. I'm not going to say I cried, but I've never had a kid, but I feel like it's something that's kind of close to that feeling when you have a kid. That love you have, that's what I'd explain it as. A very good feeling, a feeling that I'd like to have more often. Yeah, I mean, look at this. Is that what you want to trade? Is this the type of price action you want to be in? Nah. See, people that are in this, look how stressed you are. Whether you're buying or selling, you're just stressed. And the second it looks like it's going one way, it comes back. The second it looks like... Now the euro is a little better when it comes to the price action is, but it's still, this is, and me, I am stress free right now. I'm not worrying, oh, it's in this range. I'm just enjoying what's going on. Said this on my other live stream, but I'm not going to be trading this week, especially after what happened on Sunday's open. I want to see what the market thinks, how the market's reacting, and then hopefully next week I have some better opportunities. I won't even demo trade, to be honest. I could take a demo trade and make myself feel good or make myself feel like garbage, but I am good on that. Really? Alright, I'm actually going to cut this a little short because I don't really think anything's going to happen. I'm going to give myself a little 2-hour break. I'm going to eat. Might go outside and walk around. I'm in Arizona, so I'm actually 3 hours behind. So it's actually about to be 5 o'clock here, so it's actually still cool. Get some fresh air, do a little stretching. I had, let's see. Hey, this was a good stream. I had the most viewers I've ever had so far. I've only done 3 live streams, so. But hey, as long as we're continuing to improve, I'll take it. To everyone that was here, I appreciate you. Catch you back at 10 o'clock Eastern Standard Time.